Right, let's get into it. So just a little bit of a sort of recap on the week and sort of maybe a little bit of an idea of what we can sort of expect sort of moving forward coming this week. So we just had a massive week with the risk news and that last week, and for the amount of sort of risk, sort of strong risk dominant sort of bits of data and that were coming out last week. You didn't see an overall massive amount of move. It's really, as you can see here, this is DXY. It was just really just still ranging all the way through. Through the end of the week, though, I mean, everybody knows what happened with NFP. Like, they absolutely blew it out of the water. I think it was like 180,000 previously, 170,000 expected, and I think it was 350 or something. It came in afterwards, and I mean, I don't need to talk about it too much, but you can see the move here. Dribble, 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 dribbles, actually breaking to the downside and then just bang and exploded up over there. So the last couple of days, though, I mean, this is really throwing things around. Like, as I've said, like I've been dollar bearish, but you can't argue with that kind of punch to the top side. But certainly, I mean, look, we're coming down here, we're testing support. We fly back up here. That was after FOMC was around this period here. Actually, no, FOMC was here. Flew us back up the top over here. Obviously, unable to close outside this range. Straight back down again. Like, it was just all over the place. And I think a lot of the market, honestly, was still looking, particularly when you see this setup coming down here. As I've said a couple of times, these are the confirmations here, and we didn't get the confirmation down the bottom there, but it was certainly dribbling down that way. So I think the market was expecting at least a sort of flat number, or in the ballpark of what it was, not certainly not sort of 2x. And also in the other direction. That's another thing as well. Like, it's not just that like they got the numbers wrong, they got the complete direction wrong. And obviously, as we saw with this, well, bang, DXY got dollar just got bought up hard over a whole bunch of different crosses and that as well. But the interesting thing, and I'll sort of get into a minute as well, because like if you're using DXY US dollar as a sort of bit of a risk barometer, certainly this shows okay, yes, US dollar strength. The economy's been they've been coming out with pretty strong data most of the time. It did get sold into a couple of times, which was strengthening my idea that we were going to be breaking down over here, but this just beat by so much. Shorts recovery straight away. That was the big move there, and it just really sort of jammed up to the top side there. So, you can't argue with how strong this move was. We are coming into a little bit of a sort of known sort of resistance area, quite strong here, because this is just on the 4 hour now, but you can see how many times I tried to get through here on the way down. And then just above that as well, at 450, we've also got a little bit more. But I'd say this, 400 to 420 is going to be certainly a little bit tougher to crack. We've got a couple of geopolitical things that have popped off over the weekend, so that could add into it. We've got Jay Powell talking in a couple of hours, so that'll be interesting to sort of see what he has to say to sort of shine a little bit more light on stuff there. Because certainly through the FOMC, like the little report that he came out with, the report that came out as the sort of print was dropped, had a pretty sort of sort of a bit more of a dovish sort of hawkish tone to it all. And we saw US dollar kind of sort of like push up a little bit. But then obviously sort of through the press conference, came back down, and then sort of, as I said, this is around this period here. And that's when, that guy in the question time just said, look, are we gonna sort of get those rates on time? And Powell basically said, no, look, we don't think we're going to be, didn't definitively say no, but he said, look, you know what, pretty much we're not looking like we're going to be at that point at that time. And so the market took it and they bought it up and they ripped it up to the top side there. So, yeah, anyway, long story short, it was a very wild up and down week. It has been for the last, I mean, pretty much the whole year. Apart from this sort of breakout point through here, this is a super tight range that we've been in. I mean, this is where we at here. There's less than 1% range here. Not including this bottom wick down here. So the bulk of the week is in this area here. 0.7% there as well. So it's been super, super tight with it all. So this may be giving us the break we need. As I said, we've got a couple of the geopolitical stuff kicking off. That could be sort of strengthening it up. It could be Powell sort of doubles down on sort of a bit more of the sort of dovish thing. I mean, the thing is with it, they cut rates to avoid recession. And so if the data is looking poor, things are slowing down, they can go, okay, maybe we over tightened and we held it for a little bit too long. And, businesses are finding it hard to, employ people, make profits, manufacture products, all these kind of bits and pieces. So we better sort of like, cut the rates to sort of really help stimulate the economy back up in that upward trajectory. But that's not happening. You're getting strong US data printing, uh, quite a fair bit actually. The majority of it, you get the odd one, which is a little bit on the weaker side as well, but that's expected at the moment. But more or less than that, it's got pretty strong data. So that kind of takes away the idea that they would need to sort of give it that helping hand and push it along with the sort of the cutting of the rates. You know, they were saying March originally, but sooner rather than later. So yeah, there's a couple of things that are pointing certainly to a bit of a push up here from a technical side coming into the resistance. So that could be something to watch and sort of see how this goes. But certainly this was a very massive move. Like as you can see outside what I call the range here, this is the trigger point that I called it. And look, it's going above it and just closed there. If we just jump onto like a weekly really quickly, this is really starting to look very, look at how hard that when it runs, it's on the trend. It doesn't give up. I mean, obviously this was a ridiculous kind of move here, 13 weeks or something, I think it was straight before it sort of pulled back down over here. But certainly that's a bullish looking close and push to the week. The RSI's definitely got a little bit more room to support it as well. Where are we if we're coming down here? So we're on around, close pretty much right on that 50%. So yeah, it's going to be a little bit interesting to sort of see how this week sort of plays out. But certainly looks like dollar bullish is in play for sure. I mean, obviously it has been a little bit here, but these consolidation periods are very much have led it to be okay. Look, could we see a rolling over? Could we see a push back down? But yeah, certainly at the moment it is looking mighty strong. I would have to say. All right. So anyway, on to what kind of news we got sort of going on here. So as I said, we got sort of Powell talking. This is sort of happening tomorrow morning, our time. I think it's about 6 o'clock or something, on the 60 minutes or something over there. Then in terms of local data, we got cats and services. Look, that's still tipped to be going up. China's trying everything it can to stay relevant at the moment, and it's just really not hitting home, I'd have to say. So, yeah, I mean, look, as long as they can keep printing above 50, that's holding things. If you get the big shocks and it comes in at like 47, 48 or something like this and a mass slowdown, then, we're going to see, obviously the one get hammered a little bit more. That's going to flow onto like Aussie. I don't trade New Zealand, but New Zealand would probably take a whack off this as well. Speaking of Aussie, we do have it's only low here, but we got trade balance, job advertisements early on Monday morning. But apart from that, it's looking like reasonably pretty quiet, and that a little bit of Euro news in that sort of later on there. Monday night, Tuesday morning, 2 a.m. here, we've got ISM, PMI. Look, it's still these are the ones above 50. We're sort of seeing a bit more of an expansion with it all. So yeah, it'd be interesting to sort of see where this one goes. But as I said, the US data has been quite strong recently, and as you can see here, expected a bit of a tick up from 50 to 52. Push along, this is the big one for the week, or at least as far as I'm concerned, and that Aussie cash rate. Look, there's zero chance that they're going to be raising here. Like, it was questioned for a while because we were so far behind, but we've just like been absolutely down so much. I mean, look at the, oh wait, oh no, this is sorry, cash rate here. What we're talking about. I was trying to bring up the CPI prints, but of course, that was last week. CPI's just been hammering down. We had one tick up, and we went up to like 5.6, but we've been dropping an average of 0.6, 0.7% every print the last three times. So we've really sort of come back into it now. We're like 3.4 or something like this. So I would say there's zero chance that they're going to be doing anything with the rates here. I mean, obviously, like I've said with everybody else, they're definitely not cutting. They're not near that. That's not even part of the conversation. I think sort of with Aussie, they're tipping, I think it was around June for a cut, for the first cut. So, see if they're sort of in the same camp as sort of people calling Fed March, and maybe that sort of ticks on a little bit longer. But it's still a couple of months off now. But certainly for the moment, you're not expecting anything. It's going to come in 4.35%. I don't like to work in absolutes, but I'd pretty much put money on that if you could. That's going to come in flat. Big one's going to be the press conference coming out an hour later. So this is a bit of a change of pace in 2024 for the Aussie because now we're having them. I think it's every 6 weeks that we're having the rate decision, and we're having a press conference 1 hour afterwards. So we're sort of following suit a little bit with sort of what the Fed does here. So that'll be interesting to see if Bullock has actually still got a bit of a sort of hawkish attitude towards it all, or if she's too early to sort of pat herself on the back and say, hey, look, you know what? I find a lot with the RBA, they tend to, like, they're supposed to be sort of like, separate to everything else, but they very much do pander to sort of public perception of them, in my opinion. So I would say very much she's wanting sort of to deliver some really good sounding news, a bit of sort of rate relief for the mortgage holders, this kind of stuff. Aussie's already been trading like absolute garbage. That is very much something that could really push it over the edge. It's just been hammered last month straight. So yeah, I think I would say certainly if under 65, we've got some quick drop off to happen if that does sort of come. But that's going to be the big one there. So it's on Tuesday afternoon. Moving forward, yeah, again, nothing super looking here for myself. Got a couple of sort of Fed speakers and that sort of scattered through the way. We got sort of China CPI. That's still in sort of deflationary sort of period areas at the moment. That's not going to be helping the yen, the yuan too much. And then sort of rounding out the week, you got unemployment claims on Friday or Thursday night, Friday early morning for us in local time, and then Bullock talking again on Friday. So not a great deal of sort of news this week sort of coming out. Certainly, I think after last week being such a massive week with all the risk associated news, I think everything's kind of just calming down and chilling a little bit here. So it'd be interesting to sort of see if we can see a continuation of that sort of price action after NFP. Sorry, after yeah, sorry, of course it was NFP. So yeah, so interesting to sort of see how we sort of flow through with this. But very much as I said, it's out the top side here. Had that little back test here, as you can see, fired on here. Didn't fly up and close the week out, but as I always sort of say, look, last couple of hours of US session day to day is pretty quiet. Last couple of hours of the week is just rubbish. Like, I mean, I don't know anybody who would be. I mean, for us here, Melbourne, it's middle of the night, so early into Saturday morning. So yeah, it's not really expecting too much. So you can't take much away from this. Look, if the market reacts sort of accordingly, sort of with that US sort of strikes back on Yemen, that could fly. That could give it a little bit of a push up and a gap up in it all. But again, you don't generally see these. If I go back onto this, you don't see these resistance points break first time generally. You know what I mean? It's sort of come through. It's come here. That was a big, massive engulfing day here, but we're right up into this area now. So I would be surprised if we sort of pop through. And if we do shoot through here, I imagine that we probably get a little bit of a sort of a clipping around that 104.50 level anyway. But certainly, I would say we've got a little bit more of a potential upside move. If you want to see this RSI, if I was a dollar bull, I'm still coming around to it, but you'd want to see this crossover and push through. So we very much could have that come next week and that. But yeah, on the underside of this kind of channel, but as I said, it didn't break down. It just sort of dribbled out, and now it's fired back up. So yeah, I'm sort of waiting to sort of see how this sort of is taken by the market here and see what happens in this 104 to 104.20. You get above 104.20 and you can hold and close up around here. Okay, I'm on board, and a little bit late, but yeah, I think there'd definitely be a little bit more sort of squeezing to be happening there. I'll flip across to gold because gold, look, it took a hit, like everything did, but it actually sort of fared reasonably well, all things considered. I mean, we saw the size of that DXY candle, and typically when gold in a normal sort of surrounding or setting, has a pretty strong inverse relation to US dollar. So yeah, okay, I'm back. Yeah, so I can't remember where I was just at there, but basically, it held up all things considered quite well because, I mean, if we put these side by side with it all, that's what I'm saying. If in a typical sort of setting, we've got DXY and gold, we've got a pretty strong inverse relationship. Occasionally, you do get these points where sort of gold and US dollar are sort of running at the same time. If you have a look at these ones here. Um, so on here. and the daily here. So as you can see, this is a massive engulfing day for US dollar, pushing up to the top side. And look, at one point, certainly, gold was hammering down, got down below these sort of like 30s level that we've sort of been sort of looking at a lot of the week. And this is why I said, look, it's, as much as we've sort of been past this 40 level and pushed it off, I didn't want to call it a support because, it had been let through a couple of times. It seems like a pretty much main wick zone between this sort of 30s and 40 area. But it did manage to sort of pull back a little bit into the close. It's certainly still not looking like a spectacular thing. You can see that this move is pretty much sort of completed around this area over here. So again, a wait and see sort of thing for Monday. I think if we sort of break those lows of that sort of NFP move, so down 27 or below, I think gold's going to be in a little bit of trouble, and potentially sort of we could be sort of seeing a move back down to this sort of like 2015 level sort of first. And then after that, we could potentially sort of be seeing the test of the 2000. This is if we do get that sort of breakdown further there, US dollar does continue to run. But just realistically, if we look at that side by side, gold pulled back a little bit. So I think it's decoupled a little bit from this US dollar move. So again, this is very news driven. So a lot of the market, like myself as well, was sort of positioned for sort of dollar bearish. I mean, if you look at this, that is just a complete bearish daily candle, closing right down below all these other ones here. I think a lot of people got position, and then it's just ripped right out the top side here and sort of blown a lot of people out of the water with that number, because it was a shock number. So the question now is, do they sort of go, is that NFP number enough to seal the deal and see the market go, well, that's it, that's enough for me, bang, we're going to keep moving it and we're going to keep ripping it higher? Or is it going to be maybe a little bit of a sort of a honeymoon period for that? So, Monday, see a little bit of US dollar strength sort of continue through. And then we sort of go back and revert back to sort of what the market was doing, which was, more or less sideways, really, but it just wasn't firing through at a big rate. So, I mean, the thing is, it's sort of like, even though the rate decision has, the rate decision to cut has kind of been pushed back pretty much definitely now, it hasn't disappeared. It's not like, hey, we need to put the rates back up again and hike more. So the conversation, I think that will always keep, at the moment, the US dollar a little bit sort of subdued from seeing the same kind of run that we saw going through this period sort of last year, in the sort of first quarter of the financial year last year. But, I mean, just because it did it in the past doesn't mean it's going to be doing it this time as well. Anyway, on with what we were talking about. So back onto gold. So yeah, certainly downside. I think if we take out the wicks, so this would be here, set a little alert. Under the I'll point out it's past 12 o'clock here. NFP D1 wicks low. If we get a breakdown under that, then obviously I think the shorts are going to be in there. We've got a bit of a congestion area through here, so it might be a little bit sort of a tussle back and forth. I don't think we're going to necessarily just get a complete meltdown. Certainly if you get under 2000, you're going to see some pretty sort of sharp drop-offs, but at the moment we're at 2040, so that's not really part of the conversation. 2040 was that level that we saw is obviously sort of quite a strong resistance a couple of times, and it's allowed to sort of go through it a couple of times, but it's managing to still close up above it. So I think, it's still in there. This is what I was saying last week, though, that this was our battleground. Once we got above 40, that this was the area that I was looking to see things tussle between. Yes, it's sort of slipped down underneath here, and as I just said, if we go down under that again, we see a roll over here and bang, push down, well, that's it, good night. But it did manage to close back up towards this level here. So if we do see a bit of a positive push, I think this is an area that we sort of really have to see a break and close outside of before we sort of can say, okay, yep, that's it, gold's done, and he's going to be pushing down further, or we're just going to see a little bit more of a grind along the sideways here. The stuff going on with Yemen could also keep gold obviously a little bit elevated, and that's probably why, despite US dollar running off NFP data, we did see gold actually still hold up quite strong, because same sort of thing, sort of when Gaza and all that sort of kicked off, gold ripped. 200 bucks in a couple of weeks it moved. So it's obviously that is still part of the choice, part of the thinking to hold gold while that geopolitical risks are kind of heightened. But yeah, so again, see how we sort of pan out in the week. But at the moment, look, really that's our big range above sort of 2057 and 2000. In between here, I mean, certainly trades to be done. I mean, it's a 50-buck range. But yeah, it's very choppy, in and out sort of stuff till we break one of those two for me. Aussie, as I said, just absolutely demolished. This is the Aussie just flew back up. This is the thing as well. I was like, look, maybe we've got this double bottom. And for a second there, we were looking okay. I said we had to get above sort of 66.20 to prove it. We got up to 66.06 or something. And then that news came out and bang, just like, Euro, like cable, like it just got absolutely hammered. People just like got rid of anything other than US dollars. Any other positions, they just sort of bailed out of. So we're pushing right down here, as you can see on the 61% fib. This is on from that move from below 63 up to 69 cents. So it's come under a lot of pressure the last month or so, as you can see, as it continually moves down. I think sort of this area here is it came out of the channel, but didn't actually sort of go, okay, bang, we've broken out and pushed up. It just dribbled out to the side. So yeah, it doesn't really give it a great deal of faith with this one here. But certainly, I think coming into this area, we do have a little bit of sort of support coming in around sort of mid 64s, 61% at 65 cents, but 64.70. I think sort of once we get down to this area here, and this could happen if we get the whole, it's pretty much guaranteed to hold, so that'll probably have a bit of an impact. But if if Bullet comes out really dovish, then this could really sort of push Aussie down pretty hard. And, as well, if we see DXY or US dollar as a broad sense, I know it's not part of DXY, if we see that sort of continue to push up, well, Aussie is very much going to be sort of nice shorts down under these levels. So just bring this down here. We got smaller little ranges through the middle here, as you can see, but they're not really our main sort of focus. So we might see a little bit of reactions at these levels, but certainly 63.50s would very much sort of seem like they may want to come into play if we break under 64.50. So 60 points off that at this point. So we'll have to see how this one sort of plays out. But Aussie, they've just been hammering it constantly. I can't find one time frame in which it looks anything halfway remotely like, oh, it might hold up. I mean, we had some pretty nice little wicks here. And as I said, just before that data came out, so where were we? We were up at 60, we were over here. So we had three nice wicks down here with a bit of a bullish push up over here. It was ready. The market was looking for, an NFP number pretty low or flat to go in line with a couple of other bits of data, and obviously it didn't. You can see the buyers were trying to hold it up here on the way up. They were trying to hold it now here on the way down as well. Well, that's really just sort of blown it out down the bottom side here. So yeah, it's not looking great. Obviously, look, you can see through this area here around the 61, we did have quite a bit of sort of resistance to get back up over this level at 65. This was the part of that 61% push down from the first breakout, or so larger sort of part of the first breakout. So yeah, it's really, I mean, there's nothing good to say about the Aussie at the moment. It's looking very sick. And moving on, we got copper. Copper, I was really looking for something to come up over here, but as you can see, it was trading. If we get onto a lower time frame here, it was actually trading quite heavy, even prior to all that news. As you can see, sort of like when DXY was sort of flying to the downside, copper, it tried to push up a little bit here, but it just never really sort of came back into life. And as you can see, just down, down, down. It was pretty sort of unaffected by that news, I guess. I mean, look, it had a bit of a pushback down here, but yeah, nothing sort of spectacular, really. The fact that we're sort of closed right down here on the lows, it doesn't look great. We got the RSI rolling over here. The thing that I'm looking at with it, and this is why I've got these three bits marked out here, this is the underside test, and which pretty much came right in the cent. We had the horizontal there. This is in danger of sort of having a big head and shoulders coming through here. So we're still a fair way off that, but if you got down to sort of say 372, excuse me, or a close underneath there, then that's something certainly to be looking at. And if that were the case, you got a pretty big sort of measured move coming to the bottom side here. I mean, that takes you right down here back to like, pretty much that wick lows from last year. So yeah, that's not looking great for copper at the moment. I mean, look, realistically, we sort of say this is our move up. We've tried it again. You could say that we're still trying to hold these areas through here. We got a bit of a confluence at the 38%, but the thing is as well, even though it was only marginally lower, it is actually a lower high that's sort of coming in here. We got the RSI tipping down. Certainly a very bearish sort of looking week here. And this is another thing that goes into sort of showing that even while this copper was ripping up to the top side here, Aussie just was not doing anything. And copper is a big driver of Aussie when Aussie's moving well. But equally, if copper comes off and Aussie's already trading heavy, that could be a double hit for Aussie there as well. Another thing that's going to affect that is this push up here on DXY, sort of on the one. So we obviously this is the area that we were trying to sort of get it to be knocked back down underneath, and like everything, US dollar just got bought up through that NFP. So bang, coming out to the top side. That was a very deep pullback down here. As you can see, if we have a look at, actually, I haven't seen how far this is, but down, look at that, it's on the 61%, pretty much like right to the sort of right to the line there. So on the 61% pullback of this coming through, if you break these highs over here, you're looking up to 726 in my opinion. Probably got a little bit of sort of a bit of a tussle over here, as we can see there's a little bit of buying support, and obviously got smacked down on the way back down here. This would also play into the larger head and shoulders pattern that I have sort of been sort of trying to see play out for a while here. So yeah, if we get above 723-ish, I think it was around that area, 723.19 here. If we see this, then I'd say there's a good chance to come up and test the underside of that mega grind range that we did for, that was about 3 months that we were going sideways in that there. So this is very much a higher low. It's pushing up the top here. We could probably almost sort of link a couple of these together, see what they look like. And not overly keen about that, but say that were to be something, could vaguely maybe come in. I'm not a big fan of this top line here, but it does work that we had this sort of breakout of this falling sort of resistance, back test, and then obviously it's moved forward there. So if we see US dollar continue to get sort of bought up through here, then yeah, obviously we're going to see this sort of appreciate a little bit more to the top side here as well. But yeah, certainly Aussie's looking pretty sick this week. Gold is, the jury's out on it. I mean, it's not completely dead yet. It's certainly not making any sort of new highs at the moment, but at the same time, even though we had that strong push on US dollar, it held up. It held its own a little bit there. It did take a hit naturally, but it certainly wasn't something that just said, bang, okay, good night on that there. So we'll have to sort of see how it plays out. See what Joe Powell has to say in a couple of hours, because I think that'll probably be the sort of the talk of the markets, at least through Monday, and then obviously leading into the the RBA. Okay, that's it for me. Too late. All right, that's it for me.